Greetings, members, one and all of the Salivation Nation. The LBMA acknowledges buying frenzy in the silver market. Let's explore. In a rather unprecedented move, the LBMA, the London Bullion Market Association, has released their Silver Investment 2021 report here. And it is something to see because they're acknowledging some things here that is kind of notable. And we're going to look at this through the eyes of this article that was shared with me by the member of the community about the acknowledgement in the silver market and silver shortage fears, as the title says, although it should be noted that the silver shortage is just within the confines of the products that are being produced and sold. There is a shortage of those for sure, as we all have been aware, hence the high premiums and out-of-stock notifications on many of the favorite bullion dealer websites that we peruse. This article talks about the authors of this report, this metals focus group that you've heard me reference in terms of other publications that the Silver Institute has done. Likely they probably had a hand in this report as well. But the LBMA has decided to publish a specific report on investment silver at this time is notable. And it hasn't published this type of distinct report in the past. But beyond this, the report itself is worth reviewing for what it says as much as for what it leaves out. So it's pitched as a spotlight of silver investment, a report which explores the key developments in silver investment over the last 12 to 18 months. The LBMA report, which is quite short at only 15 pages, focuses on recent trends in demand for silver exchange-traded products, silver coins and bars, and the in-silver futures market. It also surprisingly mentions the silver squeeze in great detail, which refers to the much-publicized social media campaigns and a social media buying frenzy of silver bars and coins and silver exchange-traded products. The report begins by commenting that the past 12 to 18 months have witnessed some incredible developments in the silver investment market, including a dramatic improvement in silver activity, and that the combined demand from silver bars, coins, ETPs, and futures positioning rose by about 20% in 2020, with the growth in this trend carrying over to the first quarter of 2021. Of course, we know what happened around late January and early February. We'll get to that in a moment. It was only a matter of weeks, the ETFs, and the LBMA report notes that the silver ETF holdings reached a record high on 1.2 billion ounces in early February 2021, and that London is the world's largest storage center for ETF silver, calculating that 725 million ounces is held on behalf of silver ETFs, such as the iShares Silver Trust, which is the SLV by LBMA custodians in London, the custodians being JP Morgan and HSBC, and their sub-custodian banks, Malka Amit and Loomis. Now, we know JP Morgan is the largest holder. In fact, they are the crux of really kind of the early movement buy silver crash JP Morgan, because they were the largest custodian of the SLV. And we know that JP Morgan has been certainly instrumental in what I refer to as micro manipulation, which is a big deal, but it's the amount of manipulation that occurs for selfish reasons within their trading desk, where the prices can be manipulated both down and up in order to profit, utilizing tools such as spoofing. Surprisingly, the LBMA report acknowledges that strong inflows into silver-backed ETFs in late January and early February, if they had persisted, could have led to the LBMA London vaults running out of acceptable silver bars for the ETFs. Let me read that again. This is interesting that they're making this admission here, that if it had persisted to the level that it was in late January and early February, that it could have led to the LBMA London vaults literally running out of good delivery silver bars for these exchange-traded funds. It states, early 2021 saw an unprecedented 110 million ounces added in just 3 days. Although some liquidations emerged, there were concerns that London would have run out of silver if ETP demand remained at a high level. And there are noting what I have been saying is that some of it had waned off a bit. And so if it would have been persistent, well, that could have had that impact. Now, demand is still strong, as we know, for sure. This year, the location of the custodial vaults has come into sharper focus as ETP demand has jumped, leading to concerns about potential availability of the metal. Now, keep in mind that through all of this, and it's amazing to see, as I've said, I've been quite flabbergasted and shocked and amazed at the heavy demand that we've been seeing as of late. But one thing that we should keep in mind is that through all of this, that does not mean that they're stopping mining, refining, and fabricating silver products. They will continue to do that. And especially we know with demand increasing not only in the investment sector, but also for industry, technology, and biomedical uses. There is something I had highlighted in a Bullion Star article previously the author had. There's a problem already, 85% of silver in London already held by ETFs, which concluded that a few more days of inflows like the ones seen over the last part of January into the February would be a major emergency for these ETF providers, particularly the iShares SLV, because there's just not that much physical silver left in the vaults of JP Morgan, Brinks, Malka Amit, Loomis, and HSBC, which is not already reported as being in these ETFs. So the LBMA report continues, as the social media frenzy gathered pace in late January, demand for coins, bars, and ETPs all jumped. For the latter, global holdings surged by 119 million ounces in just 3 days. This was concentrated on the iShares Fund SLV, where holdings rose by 110 million ounces. Given that most of this metal was allocated in London, fears emerged as to whether there was enough silver should demand continue at this pace. So yeah, that's fascinating to read that. But we can make some conclusions from this. Let's see if the article does, and then I will talk about it. What the LBMA report fails to mention, though, is that the extra silver, which is 3,416.11 tons in the form of 113,501 good delivery silver bars, could only be added to SLV over those 3 days by SLV's custodian, JP Morgan, frantically tapping into silver bars which it claims to have secured in 5 vaults all over London, namely Brinks Vault in Premier Park, London, Loomis London Vault near Heathrow, Brinks Unit 7 Vault Radius Park near Heathrow, Malka Amit London Vault, and JP Morgan's own London Vault. More importantly, the LBMA report also fails to mention that concerns about a lack of silver in London were also so great the iShares Trust SLV actually changed its perspectives in early February, adding the wording that the demand for silver may temporarily exceed available supply that is acceptable for delivery to the trust, which may adversely affect an investment in the shares. It's possible that authorized participants may be unable to acquire sufficient silver which is acceptable for delivery to the trust. So the LBMA is finally admitting this, which is what has been talked about near that time. I remember that language being mentioned about the prospectus. So it is interesting to see, but we know the deal with SLV for sure. Luckily, the author mentioned SLV prospectus amendment in the article, and it talks about it. But the report goes on to say, had demand in iShares continued at the frenetic rate in late January, early February, it would only have been a matter of weeks before London's existing stock was used up. While it would have been surprising to see the ETP demand maintain this pace of buying, the concerns were still very real. This reflects the time required for refinery to convert non-good delivery materials into 1,000-ounce bars approved by LBMA as good delivery, and then delivery of this by sea freight into London. The above sounds like too much honesty from the bullion bank of LBMA. You're not alone in thinking so. Perhaps no one from the LBMA reads the metals focused draft of the report before they hit publish. It's a far cry from the bullion bank apologist in the silver market. There's an example that there was who said there was no shortage of silver in the London market. And it's also interesting to see the above quote that silver, since it's bulky, is not transported by air, but by container truck when moving within a continent such as Europe, and by sea when moving between continents, or to an island nation such as Britain. Silver enters London via container ports located in the terminal ports to the east of London. Here we can see these bars here in this photograph. And, and I'm not sure exactly. We're not going to really get into this. These are links to YouTube videos that are talking about it. But anyways, the problem with the iShares SLV is that it really will never be fully tested. Now, obviously, there are people who want to get delivery of this bars, but what does that mean? Taking it from unallocated to allocated, we all know, it's common knowledge that there's way more paper products, in other words, receipts for the actual physical in the iShares SLV. And that's where the main focus. I think that has waned off and moved to PSLV, Sprott's enterprise, which is backed by physical, at least as far as we know. And I think that's where the shift came into play. But as we have seen, I think it's quite telling that through all of this, and it should be noted that as sort of a balance to this, we've seen one SD Bullion. SD Bullion had for sale on his website 1,000-ounce bars. A member of this community was in my live stream, and he mentioned that a friend of his actually bought several of them. So I think that's quite telling that they were able to secure these 1,000-ounce bars, which maybe means that there is some sort of liquidation measure in place, or that one fear is that, or one possibility is that, the JP Morgan and the like that hold these bars make it much more difficult with fees and the like to be able to liquidate, to take delivery of these 1,000-ounce contract bars. So the article continues here. A section of the LBMA report also looks at identifiable global above-ground silver stocks, commenting that the recent jump in ETP demand has led to fears as to whether there are sufficient above-ground bullion stocks should ETP holdings see a further sharp increase. But there are sufficient above-ground bullion stocks that could be called upon by the ETFs. That's the question they ask. Their report more or less says no. There is a gulf between the total of silver above-ground stocks and the portion which can be quickly allocated against ETPs. Even though above-ground stocks are difficult to pin down, there's no doubt that bullion stocks account for a small share of the total. There you go. They pretty much admit it. The biggest identifiable silver holdings are held in London, COMEX in New York, and Chinese-approved vaults, which at the end of 2020 stood at a combined 1.694 billion ounces of silver. It's interesting that the point about the 1,000-ounce silver bar market being far smaller than the above-ground stock of silver is a point which exactly concurs with what has been described by David Morgan in an interview, which he recently did for Bullion Star Perspectives. And interesting. But now much of these identifiable silver holdings in London COMEX and Chinese vaults are actually available to ETFs. How much are they? I don't know. The LBMA report would have you believe that the answer is a lot. But is this really the case? And then we're getting into speculation here. I don't know. But I believe it's fine to question this stuff because, it's never been tested like this. You've heard me talk about that the SLV. We all agree that there's a lot more of these paper holdings than there are. Essentially it's derivatives, for the actual physical out there, which is why I've always been a proponent of holding physical. Now, I believe that the SLV specifically and especially being the most popular of the ETPs, the exchange traded funds as well, those are essentially, were not really meant to be cashed out. In a stock portfolio, it makes it easy. If you want to hedge against the market, well, just throw some money over to SLV rather than take delivery of silver bars. I know several people that aren't, quote, silver stackers who have put money in SLV as a way to protect themselves, knowing that they'll never, ever want to cash out for the physical metal. They will literally cash out for core cash or their money that puts it back into a pool account, but they use it to hedge their stock holdings. They don't want to take delivery, and I believe that's probably the case with some of these early Reddit Wall Street bets people that heard about silver. They decided, well, hey, we're doing this here with GameStops. Let's do it with another ticker symbol with the SLV. And then Wall Street Silver Reddit community was formed, and it talked about how to really put in a squeeze, and that squeeze is done through actual electronic products that are literally and physically backed by silver at a 1-to-1 ratio. Even more importantly, the drive and movement since the PSLV movement on the Wall Street Silver Forum has led to the move to actually acquire physical. And physical demand for silver is something that is, I think, really where it's at in the long run. And even though it may see a reprieve on the SLV, if you keep demanding that physical, I think it's going to further enhance really what the silver squeeze is about through a period of time. We could take a look here at the different aspects, and this chart from the report itself shows that great increase in demand in the ETPs, exchange traded products, which includes SLV and the like. And there we can see through the year 2020, it exponentially increased at a dramatic scale. And then we can get to the custodians and then the above ground stocks of silver and identifiable silver stocks. And we can see here how this is played out with the LBMA silver vault holdings versus silver allocated to the exchange traded products in London. And we can see there how much has been allocated there, the increase through 2020 and then in through the end of the first quarter here in 2021, an exponential increase compared to the whole year of 2020. It is something else. And retail investment, again, talking about that, we can see here how it's just been crazy how much has been happening. Here's the social media storm section. So we can see here about just with the Perth Mint alone, coin and bar sales have just been on fire. U.S. Mint Silver Eagle coin sales, dramatic increases. We've seen that talked about in others channels out there as well. So it is something to see. Fascinating times we're living in terms of the silver market, and it is certainly something that is to be taken into account. And when you buy, that is part of the reason why you're seeing these premiums go up as high as they are. So very interesting indeed. Silver will continue to certainly wow us, I think, as we continue to see demand continue. And from what intentions I'm seeing by the community, at least on Wall Street Silver and others, is that they are continuing to buy. It's starting to become persistent. And though I think that's a good thing, I believe that probably the ultimate focus should be as a wealth preservation tool over the course of a long period of time. And I think that is what is going to keep that silver squeeze going. If you buy with that intent and understanding the premiums you're paying, and buy it in a fiscally responsible way, I don't think you can go wrong. But nonetheless, the understanding of silver's price, silver's premiums is crucial and fundamental as you click that buy button when you make your purchases. But nonetheless, it's a good idea to hold silver. I also believe in holding gold as well, as I see it as an even more stable wealth preservation tool. And there you have it. Fascinating indeed. A really in-depth article here, and fascinating. So let me know your thoughts in the comment section below. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.